All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for November 10th, 2025. We are recording this at 4 p.m. Eastern Time, and this is episode number 502. So today we have a special Option Professor Market Outlook episode for you. And so I'm going to go ahead and turn it over to Jim, the Option Professor.
Hey, thanks, David. And thanks everybody for being here today. We're going to have a great show. I got a lot to share with you, and you're going to learn a lot, so it's going to be a good deal. For those of you who are not familiar with myself, I'm Jim, the Option Professor. I have been teaching options, doing seminars, trading options for many decades. So I'm very familiar with the product of options. And I have my own philosophies of how I like to use them. But of course, I'm familiar with how most all the strategies work. And so basically, what I'm going to do today is share my opinions and my views. And of course, I don't give any advice because that's up to your broker, but I will be sharing my views and my ideas as well. So, without further ado, let's get started. There is a chat box up there that you can click on and throw a question in there if you have any, or if you have a stock you want me to take a look at, or whatever. Be more than happy to try to help you that way. And then at the end of the broadcast, I am going to explain how you can join us in our options trading community and every week get information from me and also get coaching and also get a free course on options so that you become more knowledgeable, which obviously we all try to do every day, right? So, without further ado, let's get into what's going on because big day here all the way, right? So, again, we had the shutdown. Looks like it might be resolved. As I said in the newsletter this week and in the last couple of weeks, headwinds can become tailwinds very, very quickly, right? And what are some of the headwinds have been? Well, the Fed's tone as far as their cutting interest rates changed. And of course, that is a situation where if they change the other way, that would be a headwind turning into a tailwind. They seem a little bit, uh, their comments, the December cut is certainly not by any means a foregone conclusion. Well, I mean, it can't be. We got 96% of the people working. Their wages are going up. The retail sales have been firm. The inflationary numbers have not come down, and the prospects of more inflation is still there. And stimulus is going to start happening with the big, beautiful bill. And so, as you can see, asset prices are going through the roof. So, realistically, I mean, what's the cut need? Real estate prices got ridiculously high. So, if we're supposed to cut interest rates so ridiculously high prices will sustain, maybe it makes sense. But that's a tailwind, a headwind that could turn into a tailwind if they change their tune. Second one was obviously shutdown. It's a tailwind. People aren't getting their checks. People are getting nervous about the whole thing. Their flights are being canceled. That's not good. So obviously changing that became a headwind turning into a tailwind. And then there's other factors that are going to be coming up again that could turn things around as well. Sentiment would be one because it's pretty darn negative. And of course, negative sentiment is generally not what you see at the top, right? So that's one of the bull things that guys like Tom Lee always refer to is how people they may say they're in the market, but their exposure might not be that great. And also, it might be a situation where they're not in, at all. And so basically, the sentiment still leans towards underexposure to stock. That's what people think. All right. Anyway, let's take a look and see what happens because here's basically what I was telling people in that we went down on last week. This is on the S&P 500. We went down to about 66.50. The low is 66.30. So that neighborhood of 66.50, I thought would probably be about it because I thought it might be a situation just like in October where they peak through my moving averages here and then they get right back above it. And then once they get back above it, they can go on a nice run. So like in October, they crack the average. But look, the averages aren't bending. That means the trend is solid. These again, my views and my observations. But again, you tested it here in August. That's all it was a test. That average is pointing straight up. You don't get bearish. Here's where you get a little bit bearish. When they start pointing down, right? Then you can get, and then list this little drop you had in April. Come on. It was dropping in February. This reminds me of the crash of 87. Crash of 87 happened in October, but the darn thing topped in August. You had 3 months of it going down. I mean, how many knocks on the door do you need before you open it up? So again, this thing was coming down in February, coming down in March, and then, then it had the collapse from there. Same thing here, when it doesn't break the averages and the averages stay up, it's an uptrend, so you do not get seduced. Like here, you don't get seduced. Right here, you don't get seduced. What you do is you wait for it to get back above the average, which it did, and then you play ball from the long side. Now, I also like to look at the relative strength because the two things I care about are the direction of the prices and I care about the speed of the vehicle, right? So, as you can see here, we went down from a higher relative strength down to 50. If you know anything about the RSI, you like to see it above 50 if it's a bull market, which it's been above 50 pretty much the entire time. And you'd like to see on a correction it stop at 50 and then turn up, which it just did. So the RSI right now is only at about 57. This is a key number because 60, ballpark area 60 is a key number. If we break through 60 and it goes into 65, 70, 75, 80, we are going to be blowing out 7,000, which is guys like Tom Lee are talking about as much as 7,500 on the S&P. Well, 7,500 on the S&P by the end of the year. Minus what? Where are we at? 68.35. So what are we talking about as far as on a percentage basis? Let's take a look. 68.35. Can we go up 9% between now and the end of the year if the Fed cuts rates, if everything gets back to normal with the government, if the stimulus comes out? I mean, he's talking about sending $2,000 checks out, it's hard to step in front of that kind of shall we say loose monetary environment. That's what we'd call it, right? A loose monetary environment into strength. Last time we saw it was what? 1998. What happened after 1998? The market went nuts in 1999 into 2000. Could that happen? It could happen. So the bottom line is that they're easing into a powerful market, and that, my friends, is a recipe for a spike up. So again, there's my theses. The 66.50, 66.30 is your line in the sand. And then I'll show you the other tip here. It's called the VIX. VIX is very good to me. Why is that? Because it spiked up back there in April when Trump was talking about $9 million tariffs on everybody and the world was coming to an end, right? Then, of course, he was pulled aside and said, that's a joke. The most you're going to do with China is 10%. So he went from 300% down to 10%. Is that a policy change? Looks like it. And when you change the policy that dramatically, you're going to come right back down with the VIX. And then big money. Who's big money? Institutions, family offices. They're going to get very comfortable putting their money in the stock market because there's been a change in philosophy of the government, right? And the volatility is subsiding, which means if you put billions of dollars in there, they don't want it to look like that when they have billions of dollars in there. Do you know why? Because billions can turn into millions in this kind of environment, right? So they'd like to see the relative strength subside and calm. Now, that doesn't mean it's going to remain calm every day, but look, it has been held back by the purple line all the way from April until October. So that is a long run, and the stock market had a very long run during that period from what? 4,800 to 6,800. So you want to know how you go up 2,000 on the S&P? You put that VIX genie back in the bottle and you get big money to start plowing their money in. That's what happened, right? Now, in October, it got a little dodgy, right? A big spike up. But notice the spikes haven't lasted. Okay. Now, I am concerned that we're not underneath 17 on the VIX. And can you see why I'm concerned? Because it could still pop up from here. And so that is a danger. That is a risk. If we were to break 66.50 on the S&P, 66.30, whatever, not to the penny, right? And this baby starts trading above 20, and starts closing above 20 on a number of days and maybe even takes out this high here of 22, then I think you better be prepared for a 10% drop in the market. And let's go back to the S&P because I'm telling you right now, you got to be flexible. You can't just talk one story forever. So if we were to break here 66.50, it opens the door to 6,400 and it opens the door to a full Monty, I call it, correction of about 10% off the high, which would also test the highs that were here from 2025 at 6150. So what is my view? My view is simple. Be bullish right now. If it takes out 6650, prepare yourself for 6400 or prepare yourself for a more severe drop to 6100, 6200, which would be the 10% drop. Okay? Simple story, right? So that's it. Now, with regards to um, the other thing that I watch is this guy right here. Percentage of stocks over the 200-day moving average. Now, this is having crunch time. And I'll tell you right now, if this baby breaks 50, like I said in the newsletter this week, that means that the percentage of stocks above their 200-day average is tanking. And that means we're probably taking out 6650 and we're probably going to get a 10% correction. Okay. But if we were to take out 60, I think your 7,000, 7,500 S&P or wherever the heck it wants to go to, who knows where this S&P wants to go to. It's kind of like when Ohio State is playing a bad team and the spread is 30. The analyst might say it's the score is going to be whatever Ohio State decides the score wants to be. So this S&P is going to go wherever it wants to go if we start again breaking above 6,800, 6,900, and this thing gets back above 60. So that means there's a broadening out in the market. Your VIX is under 15, 16, 14, that kind of stuff, then you're going to fly like an eagle. So it's going to be exciting. A lot of smart people are saying between now and the end of the year or the January effect, which is the first couple of weeks of January, it's going to be boom, boom, boom. And today's action today, doesn't it make you feel like that probability just went up a lot? Okay, it did. Okay, but this is one day. There's a thing called Turnaround Tuesday. Let's see how Turnaround Tuesday goes. Or if we get through Turnaround Tuesday, what about Turnaround Thursday? So if they can't bring this thing down on the S&P and they get that VIX under 1716, then this thing is going to be set up for through the roof. But since everybody today, I'm sure, went home going, oh boy, we're out of the woods now. Oh boy, this thing is going to go through the roof. They might be right. And of course, that's the way the bet right now. But now that you've seen that the VIX could very easily start spiking up, okay, then you'd have to be concerned that this thing we saw today was not the beginning of the big move up to 7,500, but rather a big move of excitement before a holiday tomorrow. And when we come back from the holiday, maybe people have reassessed the situation a little bit more. So that's why you've always got to be flexible. But clearly, the way to play it was the way I talked about in the letter, which was view this move last week as the same thing that happened in October, which was just a little bit of a, grab the stops, get everybody to sell their stocks on the dip, and then run it through the roof. That's what it looks like right now because that's the evidence. Okay. All right. And then, like I say, if you're looking at QQQ, it's the same story as the S&P, only at a different speed. Same story as the S&P, only a different speed. And then you've got the small caps. Now, small caps, let's be honest about the small caps. It's, of course, they've had a good time of it since April. Everything has. And of course, it has gone up and made a new high. Let me show you what that means. You go back 5 years and you can see there was a high back in 2021 and it was around 245. And then you had a high here in 2024 and it was about 245. And then you just had a teeny bit of a new high here at 250. Okay. Well, to be honest with you, the last time it made a little bit of a new high was in 2024. You see the high here about 244, and I think it hit 245 here. So a little bit of a new high and then a tank job. So this thing just made a little bit of a new high. So again, you have to be a little concerned. But it does still have good RSI. It does still have a good trend. And again, a lot of this index has to do with quantum stocks. That's why the thing just had a drop because quantum did. So keep an eye on, your quantum stocks, which we talked about in March. We talked about this in March. You see what it was going for in March? It was going for $5. You think that was a good time to get in? I think so. That looks a little bit of a blow off though, but if you're going to take another taste, it's had a reversion to the mean. You've got a line there to trade against. So if you're trading this thing from the long side, I would not blame you at all because you've had a correction. In other words, like if you're doing call options, think about it. If a guy's selling calls down here, he's doing it after it's dropped $20. Is that the smart thing to do? It could be, but don't you think it's a little risky to sell calls after a drop like that? Because the premiums are going to be lower, and of course the price is down. So you're agreeing to sell calls into a lower strike price and a lower premium environment. That's how the buyer sometimes can make very good money because he says, "Okay, you want to sell low premium at a low price? God bless you. I'll buy it." And that's how you can make some money on the buy side. So there you go with D-Wave. Rigetti, of course, is another one we mentioned back in March, and check that one out. Where was it in March and April? It was like $0 to $10. You think that had a little bit of a run? Yeah, it does look like a blow off. But again, if you're going to take a taste, can you see this is the neighborhood where it would bounce from? If not, there's the other two neighborhoods waiting underneath. But again, if this thing is going to go back up to 40, 45, 50 and retest that high, my point was that the IWM may actually get going someplace because frankly, it hasn't made much of a new high since 2021. While the S&P's gone way higher than 2021, the Nasdaq's gone way higher than 2021, but this little dog here, this thing has been crawling along. Now, again, if you bought it recently, you've got a nice ride out of it, but not the same kind of ride you had in some of these other indexes over that period of time. So that's the story on the Russell. Um, okay, a couple of other things going on here would be on the interest rates. The whole planet says we're going to have lower interest rates. The whole planet thinks inflation is coming down, and they may be because if you look at the 1-year graph on Treasury yields, they peaked at 480 over here in January 2025, and the trend has clearly been for lower yields, and that's great. But right now I'm concerned because this looks like a reverse head and shoulders developing, and the 20-year graph has not been able to roll over yet. And that's why I've been telling people this is the April low of yield on the 10-year note, and this is the September, October low last year of 360. So these are two key numbers because if they can break these, yes, we're going to go down to 3% interest. I think it'll be because something broke. What broke? Well, maybe that jobs market starts showing 5% unemployment. That would be a break. Or maybe the price of owner's equivalent rent collapses as rents and real estate prices have the correction they probably should have. I mean, you guys all who own homes, you know what happened to the prices in the last 4 years. I mean, it went up big time. So if those two things happen, then that would be enough for the Fed to maybe get aggressive cutting and bring Fed funds down to 3% or whatever, and that could bring this thing down quite a bit as well. But what's the converse? The converse is positioning is everyone looking for lower interest rates. And what's the problem with positioning being one-sided? It can really switch the other way dramatically. Kind of like in April. What was positioning on the stock market at 4,800 S&P? A little bit heavy on the sell side or out? Well, obviously, when you get that one-sided and then the news changes, with Trump, it's going to change. You know that. They always change it. And then the next thing you know, all those positions that were out, all those positions that were short have to cover. And to this day, a lot of the people got wiped out in April haven't come back in yet, or they've come in tepidly. Anyway, so what's my point? My point is that yes, it should break down and give you lower interest rates. But if you start seeing above these numbers, what's that? Yield above 430, yield above 450. That means we're breaking to the upside, and that means all these people down here hoping for this are going to have to adjust their positions. And that's going to be pretty darn exciting. And that could also be something that might cause a more serious correction in stocks. Now, if you are a believer that it will break and the rates will come down, you could look at that in a market called TLT. And just to give you an idea, an example, if you thought this thing was going back up and you thought the yield was going to go down towards 3%, well, that would bring the price up to more than likely where it was in 2022 when rates were at 3%. And that means we could go up and test the gold line here, which comes in at about 108. So if we're going to get a substantial drop in yield, then this thing would rally because that's what happens. When rates went up, these things came down. When yields drop, this thing can go up. It's having a heck of a time right here. And you know it is because you see the yield cannot break that 394% area. So that's why that purple line is holding you back. So if that dam breaks, the water should rush up closer to here, maybe, if it goes down like that. So if I'm looking at options that could benefit from that, I'd go out to next year and you go to either March and you look at like the market's at about 90, you go to 92 calls, you pay 184 bucks. You want to go deeper in the pocket, you go just about at a little bit out of the money for 266. And if this thing went to 108, that thing would go have intrinsic value of 1800 bucks. That'd be a heck of a rainmaker. If you want, and if you lose, if it doesn't happen, that's your risk to the penny. Not bad. And then what about if you want further out in time? How far out can you go? Let's go out to the end of the first half of the year. Are rates going to drop between now and the first half of the year? Well, if they do, you've got the 90 calls for 350 bucks or so, or you can go to 92s for 278 or put up to 250. So something in here because your target is up towards 108. Why is your target up there? Because if the yields really drop down to where I would call it the entire Trump administration thinks they should be, and some of them think they should even be lower. Interest rates, yields, whatever. So again, there is an opportunity there, but it's only going to come to fruition if we break 388 on the 10-year and we break 360 on the 10-year. Then the floodgates would open up. So I think that's a pretty interesting one to keep an eye on as a diversification of risk. Okay, so I'm going to go back to the chart here and I'm going to go over gold. I'm giving you a rundown here, and then I'm going to give you some ideas that I think look pretty good. Then I'm going to invite you to join us. Okay, so let's go back over to gold. All right, so here's my feeling on gold. First of all, when it's up at 4,400 and the moving averages are down at 3,900 and the US dollar picks up steam, doesn't weaken, it starts picking up steam, you're going to have a reversion to the mean. And that is the reversion to the mean to 3,900. So that's why in the newsletter that comes out on Sunday nights, I mentioned that if the reversion comes down to 3,900, that should be about it. Again, just like we've seen with the S&P where they scooted under the average, but the average is pointing straight up. And this one's real important because you had the meeting of the minds. You had the 12 meeting the 36, and this thing is breaking to the upside. So that's very bullish. 109 today. Why is it up 109? Because it's had its correction, like I talked about, and it is moving up. And people are now covering any shorts, and they're coming back in on the long side. Where's it going? I don't know. It could go up and retest this thing. It could go up and take it out. Like I said, if we're going to easy money during a strong a labor market, during high inflation, during an easing cycle by the government where they're putting out stimulus like you don't believe, they're letting these companies write off all their capex right away. Everyone's supposed to get a much bigger refund check. They're talking about sending out another couple of grand for spending money. That's pretty darn easy. And, gold knows that. They know what a 38 or 58 trillion, I don't know what the national debt is. It's a lot, right? And I don't know what the national, what do you call it, deficit is, but I know it's a lot. And so anyway, and of course he's backing off on a lot of the tariffs. So that tariff revenue has got to shrink if you shrink the tariffs, right? At any rate, so that's gold. And, if it breaks under 3,900, like I said in the letter, you're going to open up the door to 3,600. And that would also coincide with all these high points. So there are your parameters. Hold 3,900, play it from the upside, get under 3,900, prepare for lower levels. Okay. And of course, a lot of the gold stocks had big corrections. GDX, and they're getting back on the bicycle a little bit too. Sometimes I'll look at the 5-year graph. You see on the 5-year graph, it came more like right here. So right around 70 would have been the place to take a bite, just like on the quantum stocks, right? Big spike up, pull back to some kind of a reversion level. Obviously, a further reversion would be your green and your blue. But look at that RSI looking like it's turning up. So it looks like the gold miners are back on the bicycle. And let's see what the silver miners look like. Don't forget about the white metal, huh? Up 5%. Same story. Went to 80, come down to 65. You take your bite at the apple, back on the bicycle. And again, where's it going? We don't know, but maybe it's going to go up and test these highs again. RSI is turning up. That's not a negative. So keep an eye on the gold and silver. How about the industrial metals? You know, copper, cobalt, nickel, all the rest. Again, same story, different day. Big run up. This thing was great. I mean, I've had it on the list many times on the alert. Industrial metals XME. Just follow it, follow it, follow it. Had a big correction. And now it looks like it's trying to get back on the bicycle. The 5-year graph, again, same story. Had a reversion to the mean. So obviously, if it breaks 90, that wouldn't be a good deal, right? But again, the lines are pointing up, which means there's no downtrend of which to play. That's why when things drop sharply here, it's really a product of the parabolic move up that it had. And that's why it's after they air it out, it settles down. And of course, the fundamentals on these are pretty strong because there's not an unlimited amount of copper or nickel in the world. In fact, one of the companies that I've had on the list that are very cheap right now, these guys are the largest producer of iron ore and nickel in the world. And so I thought down here at $9, that was a pretty reasonable place to take a bite on it. And it's been rallying up ever since pretty good. Another one that was a kind of a no-brainer down here at $5. This guy has got platinum too. And so this thing has been going up pretty well. Another platinum one that was a real no-brainer that I told people about and my buddy about was this guy here at $6. I mean, here at $6. Come on, how could you not take a bite out of this thing? Trends turning up. They're a large platinum producer. Platinum was like trading like, way underneath the gold prices. And then of course this thing has had a nice big run here. Pull back to the mean. So we want it to hold here, but it could keep matriculating up. That's an interesting one. But they don't have any options. No options on that one. So let's look at a couple of other things that I find interesting right now, and some of it is in the banks. So you can look at XLF just to get a flavor. You see, there's a traffic jam of the averages here. I think something big is going to happen with the banks in the next, month, two, whatever. Citigroup, you see a big, let's go over to the 1-year graph. See the traffic jam here with all the averages? I think it's going to make some kind of a big move here pretty soon. Charles Schwab, looking for a pretty big move out of Charlie. That's a big traffic jam, and the options are cheap. So I found that to be interesting because I think this thing's either going to pop to 100 or go down into 86. I don't think it's going to stay the same forever. I think it's waiting for some news. And when that news hits, I think this thing will move. Another one, this guy just came out, Chime. And, $20, not too much. Not that much data on it, but it looks like it's trying to make a move out of here. I think the thing came out at 46, so it goes down to 16, you know. Now I'm going to give you a little hint on, if you don't know anything about Chime, right? What I like to do is I like to go on Google and ask a couple of questions, right? One thing I'd like to know is, are their revenues rising or falling at the company? So you put in the company like this, and it tells you. Yes, revenues at Chime are rising significantly. Is that a bad thing? Sounds like a good thing. And they really raised their full year guidance. Their Q3 reported revenue up 29% year over year, which surpassed expectations. So has this thing got some reasonably good news? Yeah. So that's one of the ways. And then if you don't even know anything about the company, what I like to do is go something like this. What does Chime do? And then they explain down here, Chime Financial is a disruptive fintech with a simple, scalable business model targeting underserved Americans. Okay. So that's how I kind of figure out things because if the chart looks good and they're got good revenue coming in and the business sounds reasonable, it sounds like something reasonable to take a chance on, maybe, right? Another one here in that area, BFH. I never heard of it. Bread Financial. But it does look like it might want to get out of here if it can get going a little bit more. And if I look at the 5 year graph, see, this is what I like to use the 5 day graph for. Can you see if this thing gets cooking? That this is nothing but white area up here. So this is something that if we started seeing it break above 70, Lord knows where it could be going. So that's why I like to keep something like this in the chute. Now, this is another one. I don't know. You ever heard of Bread Financial? Me neither. So let's go find out what's going on with him. What does uh what was the symbol on that thing? I forgot. I'll just put the thing in. Bread Financial. What do they do? Okay, well, what they do is it's an American publicly traded provider of private label credit cards, coalition loyalty programs, and direct marketing. Provides tech-forward payment and lending solutions to customers and consumer-based industries in North America. So there, it sounds like they're doing some type of lending solutions and payments and things along those lines. And looking a little further, provides full range of payment, lending, saving solutions to both consumers and businesses, includes credit cards, loans. So basically, they're in the financing business and private label credit cards. Okay, doesn't sound terrible. And then basically, you can ask the second question, which is what? Are revenues rising? And let's see what the Goog tells us here. No, they're not. Okay, so this would be something to be more concerned about because they've been flat to slightly declining. So out of the universe of things I could do with my money, I'd back away from this, even though it looks like it could be something that could go. I just don't like to hear things about declining revenues. And so that's a classic case where if I wanted to maybe take a chance, what I would do is I'd look at something in the cheap seats. And what does that mean? I go out to March of next year. Let's see what they go for. If I thought there could be a chance of it running through the roof, there's not a lot of volume on these. So let's just say we went out to December and so say we thought something might happen by the end of the year. Here, you can get into some very inexpensive ways of taking a chance on it if you think that it's a situation where at some point it might break out. But that's very speculative. And of all the things you could do with your money, that would not be one of the ones I'd be leaning towards. But that gives you a couple of ideas. Oh, yeah, this was the one I thought you might want to take a look at because this company I have heard of, and this company I think can do good business. And this is called Lincoln Financial. Now, again, I like the way that the thing has had a correction. I like the way that the averages are starting to turn. I like the sector, the financials is having some very big potential one way or the other. I look at the 5 year graph on these people and look, if they can get above the gold line here and start closing, which they failed to do before. But if you started hearing it trading at 45, can you see there's nothing but white area up there? And so this thing could have some pretty big potential because you can see it used to trade at 75 bucks back in the day. Okay, so the bottom line is the trend has clearly turned up. The trend is moving higher, but it's having some problem here for a good reason. So this would be something you'd monitor as opposed to maybe rush right in. So that gives you a little bit of idea on the banks because I did think there was some things going on in the banks. And when you talk about banks, you also talk about this kind of stuff. A firm. And this is something I have on the list already. So we're already, I've already told people about this when it hit the gold line because these people are loaning money. Like if you go to Jiffy Lube and you need to get your car done, if you can't pay for the repairs, there's a big sign called Affirm, and you right at point of sale, they'll lend you the money right there. So we got the holidays coming up. I just got back from getting something at one of the big box stores, and I can see it's already starting and a lot of people don't have the money, so they're going to have to do this kind of stuff. The other one that actually I think they have a relationship with Walmart is called Klarna. And basically, on this guy here, it hadn't been around that long because they're a new issue. But if this thing could start trading above don't forget, look at it, came out at 56 bucks, went down to 34 bucks, it's trading 36 bucks. If this thing starts breaking above 38, it could get going. On the 30-minute graph, it's already tried to make its turn here, but it's running into some trouble up here at 37. So what did I say? I said if this thing starts breaking above the 39 area, a lot of real estate for it to go. So you keep this one on your radar. Affirm, Klarna, and Upstart. Upstart doesn't seem to be doing quite as well. You see, it's in the tanker. I'd rather keep an eye on Affirm out of the three because Affirm is already moving up. So that's better. So there's some of the financials that I'm looking at. And then another thing is energy. Everybody tells me that oil's going to 50 bucks a barrel. God bless it if it does, and it could. Let's look at the 20-year graph. Can you see if it starts breaking under here, 55, the former lows? There's nothing holding it. For God's sake, it could go wherever it wants to go. Okay? But I am noticing the RSI is holding 40 area. And that means we're probably staring at the low because unless you break 40 on this RSI, you're not going to go down here. And if it starts going to 45 and 50 and 55, then this thing is possibly going to go the other way. So that's why I find oil at a very critical point here, $55 a barrel and about 40 on the RSI. Same thing down here. You're in the 40s. Over here, you're about 45. You notice it's not breaking under 40 on RSI. And if it does that, you generally get a good drop. So again, the whole world is bearish on energy. There's supposed to be a glut, la 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 la. Okay, but you know what I've been doing? I've been watching things like Chevron and Exxon, and these things look like they could be breaking out to the upside. Why? Because all the moving averages are at 85 and the XLE is trading at 90. And a big part of the XLE is Chevron and Exxon. So why have I been bullish on Chevron? I'll show you the 1-year graph and you get an idea. You see, this is called an uptrend and it started in April, May at about 135 bucks. There's money to be made if you sell on strength, buy the dip, sell on strength, buy the dip, sell on strength, buy the dip, and use the blue line as your goal. Now we've had a correction. We still have a gap here, 166, 168. But it had its correction to purple. Notice it held purple. That's very bullish. That's called the correction. And the correction looks like it could be behind us. So if this baby can start trading 158 or 160, I think it could spike up and be very much of a surprise this year, which would also mean this guy might be a surprise as well. And this is called Exxon, of which I have a position in full disclosure here. So the bottom line is I think that this was a correction that ended, and I think it's back on the upswing, and I don't see anything stopping it. And if you want to really see what it could do, there's nothing stopping it if it wants to run. And these options, in my view, are fairly reasonable. So that's why I've been looking at energy, because anybody could go buy app loving, right? App loving. But you know what kind of premiums you have to pay to play app loving? A lot. Do you know when I got involved with it as far as the alerts? I got into it on the correction down here. See, if you revert to the mean after a correction, I have no problem because these are reasonably priced options, even if you go out in time, if you do a vertical call spread. And when it goes up to 750 from 370, which is where it appeared on my report, there's a lot of good gain to be had. Then on the retracement here, if you want to take another bite, you had a chance to do it at 550. But again, this is not my game. My game is to try to buy them in the $100 to $300 area and try to catch something that's going to go on a run. A couple of them that have happened this last couple of weeks, which was this one here. And why did I think this here? Here's why. You look at the 20-year graph on the thing, and it was way down here, and the RSIs were holding 40, right? Remember I told you if the RSIs are holding 40, you're probably looking at the bottom. Now you're at the 5-year area. And you can see again, you're here at 34, and then you're at 42, and now you're at 58. So that's called a divergence. That's a good thing. Then the other thing is that this company has a good business, and they're in the tech industry. So the options were very cheap, and I thought they could, and they had earnings coming out. So last Friday they announced good earnings, and the stock went up 15% Friday, and it's up 4% now. So it's 25% in 2 days. That's nothing wrong with that. And that's how the options can jump. Another one was DocuSign, DigitalOcean. And DigitalOcean's another one that is going to go until it wants to stop going, but it's got a good story. And you can see that it turns up, goes up, pulls back. That's your chance. Goes up, pulls back. That's where I took the chance. Okay. Now it's up here. This is not where we take our chance. We take the chance when it's near the blue line because that's when the options are cheap. And that means if we're wrong, our premium is going to be low. And if we're right, we're going to be able to make some money. So that's the concept that we're working with here. And I like the concept. And the key is to try to find the opportunities, which is why people subscribe, because I have to do a tremendously large amount of homework to come up with the combination of where's the stock trading? Where's the trend on the stock? How much are the options? Is there any news coming up on the stock? Are the revenues rising or falling? What kind of industry are they in? That kind of stuff. So it takes time to do that. That's why people pay for the research and the ideas. Throw in the coaching that comes with it, and it looks like a pretty good deal. And you throw in a course with it, which comes for free, and you haven't traded options, so you could use some education. That's not a bad thing either. So wrap it all together. It's a very strong deal, and that's why I have no hesitancy to tell people to give it a go. Okay. Any other ones that might be interesting here? Yeah. Let me throw a couple here at you. Viking, VKTX. This thing looks like it could go. First of all, they're in the biotech area, so you know how biotech is feast or famine, right? And I'll show you feast or famine right here. We had crisp on the alerts, and it went through the roof, as you can see. And then before you know it, it's reverting back to the mean. So if you want to take another taste of crisp, this is the neighborhood to do it. But it just shows you it can be feast or famine. So where's the feast potentially ahead of us? VKTX. Now I noticed a 13F filing by Stanley Druckenmiller indicated that he had rotated into a position in the stock as well. That doesn't mean he might not have it anymore. He could also be holding it on for 10 years. But I didn't think it was a negative that the guy found the stock interesting, or his group did, or whatever. Anyway, I think it looks pretty good. And like I say, if it does get going, there's a lot of real estate up here. If you look at the 5-year graph, if it can break through this purple, and that's why it's stalling out a little bit here. Where's the purple come in? 38.70. Where are we at? Around 38. So keep an eye on it, because if it starts breaking up here, it could have news that could make it go. So keep an eye on Viking. I think it's kind of interesting there. Couple of other ones here. Onto on the chart looks like it might be able to turn if you look at the 1 year. But again, nothing for sure on this, that's for sure. And then there was one here, ACMR, which I thought had its correction. You see how it's had its correction? And so it might be interesting here. The 5-year graph again had its correction. It might be interesting. But I'll show you some that we've had on the report. We had SanDisk months ago, and you can see SanDisk certainly has been one of the best stocks to have on your radar. And we put it on your radar way down here So that's the beautiful thing about the alerts. It's like a research document. So you're going to hear about, I'm going to show you some of the stocks that you've heard about. And they all don't work that way, but you probably never heard of some of these stocks. And this stock went from what, 15 bucks to 75, or maybe you haven't heard of this one. It went from 12 bucks to 40 bucks, you know? And of course I showed you the quantums. And so there's been a number of sectors where we've been fortunate enough to identify things before they moved. I mean, I don't know if you have a 5-year-old, you might know about this. This is called Roblox, Minecraft, that kind of stuff. Well, this thing was an awfully nice thing to know earlier in the year because it had quite a bit of a run. So again, you may notice not just an option idea, but you might notice a stock that you may want to actually buy the stock, or you may want to, stick with the stock until the trend changes. Because some of these things, when they come out of the chute, I'll give you two more, and then if you have questions, I'll open it up to questions. Baidu. Now, where did I get Baidu from? Well, first of all, I think China is trying to get better, not worse, right? And so when I see the stock going sideways after that, and then I start seeing it trend up, I thought that 100 calls going out a couple of months for 255 bucks were in a bad deal. Now, I didn't know it was going to run like this, but that option went from 255 bucks up to 5 grand intrinsic value, and that's a pretty big move. And of course, if you think this looks good, you always got to keep an eye on this guy because this is the Cadillac of China, and this is Alibaba. And again, same story. We thought the 130 calls, 140 calls were a good deal, and they certainly were. Now this stuff has had a correction. So if in fact it can get back above 175, it could be going on its bicycle again because both of these stocks have got plenty of room above them still. So if you are a believer in China, you can either go with one of these ETFs like this, that's called FXI, or you could go with one of these like this, and this is KWEB, and look at KWEB. I mean, if that thing got going, there's plenty of opportunity here, and that's China Internet ETF. So on the report every Sunday, I think you're getting well-informed information. And again, if you have a question on something on the report, you get my cell number. So you can text me and go, hey, Jim, I got a question on something. Can we talk at 2 p.m. on Wednesday? I look and see if it's okay. I go back and I go, yes, I'll call you at 2 p.m. on Wednesday. And that's how you set up your coaching, and that's how you set up your questions and answers. If anybody here has any questions that you'd like me to hit, or you have any stocks you want to take a look at, you could always, throw up the stock and we could take a look at it and see what it looks through my lens. Be more than happy to do that. And this would be the time for us to do it before I close up for the day. While you guys figure out what stocks you might want me to look at, let me show you a couple of other things, like how about the US dollar? I think I've been pretty clear on that. I said as long as 96 isn't taken out, I'm bullish on the dollar. If 96 is taken out on the dollar index, I think we could have a dollar crisis because the next stop down could be 90 pretty fast. Right now, though, it looks like it's just trying to have a rebound rally because those three lines pointing straight down is very tough. So that means it's going to have a tough time getting through 102, 104. Unless, of course, the whole mood's going to change on the dollar. But can you see we've got 102, 104 resistance here? So again, the dollar has had a bounce, a bump, but if we're going to make the deficits go nuts and we are going to, not care about the value of the currency, I mean, I think the administration is not concerned about the dollar. In fact, some comments have said they think Japan has done a good job managing their currency. Well, I just took a look at that and I thought to myself, if this is doing a good job with your currency, I'm getting a little worried here because this is what the Japanese yen has done in the last few years. From here to here is half of the value of the Japanese yen went out the window. So if this is what we're going to try to do to our US dollar, then I'm a little concerned. So, again, the dollar's stable and bouncing, but it's certainly not out of the woods yet at all. Okay, and that was about, oh yeah, Bitcoin. Did I show Bitcoin? Let me do Bitcoin real quick because I think I've been pretty good with Bitcoin. Because I use the 5-year graph. Why do I do that? Because the other graphs are all over the place. So here, you get bullish back in 23, and it has a pullback in 24, and that's where you get on board because the blue line's rising. Has a big rally, you leave it alone, comes back here to 80 grand. And of course, that's the former highs over here. So you take another shot. Had just a reversion right now. So is this the time to take another shot? Well, if you get above the blue line, that's 106. We're right there. And you get above the red line, you're going to be above 112. So you get above 106, you get above 1012, then I'll start listening to Tom Lee with his 130, 150, 200 grand Bitcoin prediction. But I'm not going to listen to it when the trend is rolling over and it has not been able to get above that resistance. But above there, you betcha anything could happen to Bitcoin, as you know. And it looks like it could have just been a correction. And what did I tell you when they violate the moving average and then get back above it? You remember what happened here? This could be the same thing. And once it got back above it, you went from 80 grand to 125. So is this where we get above 105 and go to 130? It's possible. That's why I wouldn't be bearish on it by any means. And it does look like it's trying to turn. So again, this would be the time to not go to sleep at the wheel on Bitcoin. And if you're looking at Bitcoin, maybe you're looking at this, Mara, or maybe you're looking at this. HUT had a nice big correction. You see that? This is called reversion to the mean, and that's where you take your shot at 35, and it's already at 47. Or maybe you rather have IREN, which was what I already showed you, but you see how it came back to 50? And that was on when? October 20th. That's not too long ago. 75 down to 50, 45. That's where you take your shot. And now it's back at 60. So, yeah, some of the stocks that we talked about have definitely turned back up. And so that's the story on Bitcoin. I'm glad I didn't forget to go over that with you because believe me, it's on the verge. Okay, so Tesla. I only buy Tesla when it's on sale. And you know what? It's not on sale. So I have no interest in Tesla. Let me show you when I do have interest. You see when it goes from 500 and everyone says it'll never go down, and I tell people it could revert back to the mean, which means 340, which means 320, or it means 240. Now, if I tell you it's going from 500 down to 240 on a reversion to the mean, you're going to think I'm crazy until it happens. So this is where you want to take your bite. You want to take another bite? I put it on the alert between 350 and 300. So this neighborhood here is when it went back on the alert because it had a reversion and it had a traffic jam and the lines are turning up. So you got to bet up. Now it's had a rally up here. What do I do with it? If I own it down here, I'm enjoying it. Maybe I'm starting to roll my positions up. Maybe I'm spreading them out. Maybe I'm replacing them with a vertical call spread, whatever. But again, this is not an entry level to me. BSM. BSM. What do you got there? All right. Well, it had a big correction down. Let's look at the 20-year graph to start out, see where it is. Okay, so it showed it had gone up between 20 and 23. I'm not sure exactly what they do. It's come back down. And I don't I see a linebacker, I see a cornerback, and I see another linebacker in order to get in the end zone. So that's a lot of people before I can get in the end zone. Let's go to the 5-year graph. Yeah, again, we still got people above us. It's trying to make a turn. I'll give him that. I'll give you that. But again, not the greatest. This is where you made a lot of money on it. Did you notice how you made money? The blue line was rising and everything was rising. That's how you make money on it. How you try to make money on it by, playing the Price is Right or let's look for a diamond in the junkyard. Well, it's always harder to make money like that. And again, on the 1 year, it looks pretty good because the blue line's rising. So if you're long it, keep it above 13 bucks. Gets under 13 bucks, you probably got trouble. If you don't, maybe it's going to make a run for this gold line. Maybe it's going to try to fill this gap. So on the 1 year graph, it doesn't look too bad. But again, it's a rougher racket because the longer term graphs are pointing down, and that's not how you made the money in this stock. You made the money in this stock when the graphs were pointing up. And when was that? That was it was 2021. So this thing has been a little out of favor. I don't know the company. If you know information that I don't know, then that's a different story. BBNX. Okay, well, on the 5 year, it looks like it's doing all right. And the 1 year looks like it's doing all right. And it hadn't been around that long. So again, on this kind of thing, obviously you'd like to have this thing hold its water. It came down and filled the gap. That's good. And now it's right back up again. So as long as you're trading above the 26 level, that would be a way to stay with it for a while. And for all you know, it's going to blow out the 30 level. I don't know what they do for work, but it looks like whatever they're doing for work must be profitable because it's in an uptrend. And SoFi, yeah. Well, SoFi is part of that financials that I'm expecting big things out of. Right? So there you go. Now this is another squeeze job, right? They brought in under blue line, got everybody to sell out of their stocks, right? Now it's right back on the bicycle. So again, something may be happening to the financials where they're going to blow off to the upside. Okay, so I've just come out and said it. So if that's going to happen, then those stocks I mentioned should blow up to the upside, and so should SoFi. And again, certainly it's in an uptrend. So do I like it? Right now, I certainly do. And I definitely like it a lot because it was able to get through what they call a scam, where they took it underneath the average and now it's right back above it. And sometimes that's the strongest thing you can get. Hey, listen, I'll tell you right now, if it ever breaks under 26, there's big trouble. So that's not happening. Uh, Converting into a vertical call spread over the overboard. This is where having a subscription and then you get coaching and you text me and you go, "Hey Jim, I need a little more help on this, so it's going to take a little bit more time. Let's schedule some time where we both can talk about it." So these ideas that I'm talking about as far as how to manage risk. These are some of the things I can help you with during the coaching sessions because, again, I've been doing this for many, many decades. Palantir, again, I'll go through these real quick here, and then that'll be about it. Palantir, again, had its reversion to the mean. They took it under the blue. Now it's above it. They brought the article about Michael Burry, got everybody out. So right now it's looking good. As long as we stay above what? The blue line. Where's the blue line? At 183. So there you go. Oh yeah, CoreWeave. I think CoreWeave looks good. Yeah. And why does CoreWeave look good? Because I went to the 1 month graph and I got a little bit of an idea it might be turning, but it's not that good. It's not that good. Yeah, this is not a good looking chart. You made money on CoreWeave because it was going up. Here you're struggling to find out if it's any good. Again, whenever you're playing struggle, it's not an easy racket. The racket is easy when the blue lines are rising. When the blue lines are rising. So when it's not rising, you're going to be struggling. I'll give you a perfect example as the last thing. IBM. Okay. IBM. You see, right here it oversold, right? So if you want to buy it because it's cheap, yeah. But again, it didn't really take off until the blue turned up and the green turned up. Once all systems are up, then it's easier to get it to go. Same back here. You see how it's cheap, but the trends are down. Yeah, you get a pop. Yeah, it goes okay, but you're struggling and you're struggling through the whole month of April. When did you have easier money? In May, when the blue line turned up. You get it? So there's a great example of this is easier lifestyle than down here. Okay. All right. One last thing here is I'm going to show you guys a little bit of a background on some of the ideas we've had on the alerts over the last few months. Rigetti, 19 call, 8 put, 287. Stock goes to 58. The intrinsic value of that call hit 3,900. So in other words, somewhere between August 31st, when it was on the alert, and January 13th, the stock went up to 58. So you had plenty of time from 19 to 58 before it expired to make a little money on this. And if you held it all the way to the top tick, the intrinsic value went as high as 3,900. Same thing with Baidu. I showed you that. 255 to 5 grand. NRG Energy. You've heard of these companies? Google, Newmont, Disney, Roblox, Blackstone. You notice they're all different companies. So what do they have in common? I've done homework, I've done research, and I've identified it as a good time to take a chance. What kind of a chance? A limited risk chance. With a lot of money? No, with 296, with 301, with 287, and so on and so forth. And even some of these down here under $200, Open Door, August 3rd, still hasn't even expired. $2 call for about 80 bucks. went up to 11, that's 900 on 80 bucks. So when they go, they go. And when they don't go, you lose the premium at most. These are expressed as strangles, calls and puts at the same time, but it's not a law that you have to do them both at the same time. Here's SoFi again, identifying companies that you may want to stick with. Applied Digital at 6, it went to 40 something. And then longer term options I put on there because why? Because sometimes Micron goes down to 120 and 130, and it's time to buy a longer term option. Sometimes AppLovin went down to 370, time to buy a longer term options. How about Tesla, 300, 350? Alibaba, 115. How about Oracle at 230? It's back down there again, but it went to 330 after that. And then other options as well. So that's a little bit of an idea. And what I'd like to do is here's the link that I've got on my screen here, but you've got one on yours as well. And here's how simple it is. I'll show you. You click on the link that is up on your screen, and where does it go? It goes over to Trading Indicators, who sends out all my information. So everything goes to you from info@tradingindicators.com. How do you get started? You fill in your information, and you either click quarterly, and look, you get a $100 discount today. It says 397, and look what that number says, 297. Or you do annual. You see it says 897, click on it, and it goes down to 897. So this is a steal. A whole year of information, a whole year of updates, a full course on options. The options course is 397 by itself. And then throw in the fact that you get my cell number to go ask me questions, and you're talking about a no-brainer in my view. And again, nobody knows what the future holds, but I'll tell you one thing, we're going to try our darn hardest to come up with good ideas, right? And like I say, you get a $100 discount if you do it today. And once you hit the word complete purchase, two things happen immediately, right into your inbox from info@tradingindicators.com. You get a receipt for your purchase and you get the course. So today, right away, you get the options course, which is a link with a passcode, and you can start learning today and increase your knowledge. And so obviously that is a very good opportunity for you to get smarter at options. And also it's a great opportunity to, in my view, to get a heck of a good research and some good ideas, hopefully. And then basically what? Coaching, where you can text me and go, Jim, I've got a question. Or Jim, can you explain something about this, that, or the other? Or give me your opinion on it. Because a lot of people have these services from all over the place, and a lot of their ideas maybe aren't the greatest. So if we look at them together, maybe we can weed out what might look good, what might not look good through my lens, through my opinion, and it might be helpful. So again, that's why I'm suggesting again, you either go with the quarterly, which is 297, or if you want to get serious and make a full commitment to make sure you're going to learn, to make sure you're going to keep on top of these things, and you have somebody you could talk to with your questions, then you hit the annual, and again, you get the $100 discount on each and every one of them. Okay? So that's all I got for you guys today. I can see you've got some questions, but again, when you are a subscriber, you can text me and we can answer all the questions you have just one-on-one at a nice slow pace. And so that's why that's why I know it's a good deal. So please try to take advantage of it. And again, like I tell people, the end of the calendar year and the beginning of the new year, there's an awful lot of activity. So this is a fabulous time to join up here, join the options community we have. And I forgot to mention one other thing is we have a webinar every Tuesday that you can attend through tradingindicators.com. So I've gone over my time a little bit here. David's going to get a hook and he's going to grab me. So I'm going to let you guys go. I hope you learned something today and I hope you join up so we can talk some more. Okay. Until then, have good luck and good trading. And of course, I'm with you every Monday here with the Timing Research Show. So we'll definitely be back Monday with new guests. So please don't forget to mark your calendar to come back next Monday as well. Have a good day, everybody. Thanks for being here.